Nvidia also announcing a 10-for-1 forward stock split and boosting its dividend by 150%. Nvidia has been all the market can talk about. The company has added more than $1 trillion to its valuation this year, thanks to its soaring stock price. It's now the third largest U.S. company by market cap, topping $2.3 trillion. Its ascent has been staggering and fueled expectations that some say have become maybe too aggressive here. Joining me now with his thoughts is Lou Basenese, MDB Capital President and Chief Market Strategist. Lou, always good to see you.
Yeah, great to be here again.
So let's just start. Nvidia reports this thing, Lou, we were talking off camera. So it's up 90% year to date, right? And really everyone's on the same side of the boat. 90% of analysts were telling me I needed to buy it. It's tacking on another 2.6% in the after hours. What do you make of the report? Give me your response.
I'm on that 10% of the side. I'm a forever contrarian, and valuation's always kept me out of this. But if I look at this report, I mean, cue up the Wayne's World. It's party on mode, Garth. I mean, let's go, because there's nothing bad in this report. I think the risk, if I had to find something, was the magnitude that they beat earnings expectation is the smallest it's ever been, about 8%. If you look back a year ago when they reported that first blowout quarter that kicked off the AI hype machine, it was about a 40% beat. So I think expectations at some point are going to get too far ahead of what Nvidia can deliver, but it's not yet. So
you're not in because of valuation concerns. And listen, that when you had skeptics on the show, they would bring that up. Yeah. Is there a level, Lou, you're more comfortable with?
Look, I think if I had to be rational, right, the valuation used to be completely out of whack until the company's grown into it. It's now at like 40 times forward earnings. If you look at Microsoft, Apple, maybe in the low 30s, I think that makes sense for a multi-trillion-dollar market cap company. Because you got to remember, right, there's an opportunity cost. How far can this market cap go? I mean, Apple hit $3 trillion last year. That's the peak, right?
It's already $2 trillion.
Right.
You think you move into does it join Microsoft in the $3 trillion club?
I mean, it could be. I think it's the leading candidate to be the next $3 trillion market cap company. But if I had $1 to put to work today and I want to 10x it, it's not in Nvidia, right? It's probably in the smaller cap side of the market, or you be more conservative. If you want to look at the Mag 7, I mean, it's really Alphabet is the most reasonably valued on a forward basis.
Can I get, besides the bottom and top, the stock split news, what's your take there?
I think it's a brilliant move psychologically, because if you look at the data now, about 40% of trading volumes is retail investors now in the latest couple months. So this is a great way to psychologically bring in more retail. I mean, it doesn't change any of the fundamental metrics and valuation calculations, but if I'm sitting there thinking about buying 100 shares or a share, it's a lot easier and more palatable at $100 versus $1,000.
What do you think also, I'm just interested to get your take, not just what this report means for Nvidia, for Jensen Huang, what are the ripple effects, broader market implications?
It's huge. I mean, I think, as tech goes, so goes the market. I mean, 40% of the S&P 500's gains have been attributed to the tech sector, if not more. If you're looking back historically, it's similar to the dot-com days. So we needed this, right? I mean, this is the leader of the AI trend, but we should have expected it too. If you looked, you reported on Microsoft's results, Amazon's, Google's, we saw the acceleration in cloud revenue, which means that Nvidia's chips are getting pulled into the market, right? That's how that's being facilitated. So.
All right, so you've been on the sidelines with Nvidia. You haven't stepped in. You had some concerns about maybe it's too pricey, but you want to play the AI theme, Lou. So where else would you be looking?
I think the more reasonably valued is Microsoft. I mean, you got to do your own due diligence, but the key difference with Microsoft, they can push AI into the market, right? They're creating products, therefore they can create the demand. Nvidia is getting pulled into the market. I think Apple's the sleeper AI
now
play.
That's interesting. Apple is sleeper because Apple is, right now, we've actually talked about this. Apple's kind of perceived as they missed the boat, right? Everybody, the race is on, they got left behind. You don't see it that way.
I don't, and look at Tim Cook's history, right? Everyone thought he was going to miss the boat after he came in to replace Steve Jobs, and he continued that tradition. They're never first or second to market. They come in later, but then they come in late, but they end up being the leader. And here's the key differentiator for Apple. They have 2 billion active devices in use. If they just iterate and add a little AI somewhere, it has a magnified impact on
big, loyal, satisfied group. And also, I always think with Apple, Tim Cook, he controls the software, the hardware, the chips, right? It's that vertical integration. When he decides he wants to make his move, he can flip the switch quickly. Are you sort of looking ahead to that software show for Apple? Is that kind of maybe a catalyst you're looking to?
Yeah, I think that's the first step for Apple, but it's going to continually and perpetually underwhelm people, right? Apple's in that swing of sentiment where people just don't believe they're going to pull a rabbit out of the hat and become a leader again. I think this is usually is the time to buy in Apple. Historically, full disclosure, I do own it. Firm doesn't. we don't do any investment banking. But if you look now in the middle of the doldrums of summer approaching ahead of holiday season, has historically been a good time to time the market.
Seasonality works for Apple during the summer. Well, all right, so Nvidia too expensive. Any other chip names you find attractive?
I really think ARM Holdings coming back to markets, re-IPOing as a public company is attractive. They give you leverage to whatever the next semiconductor trend is. They're branching into AI pretty aggressively. They have a recurring revenue model that's much more attractive than a one-off sales model than Nvidia. I think if you want to go small,
you're obviously saying too, you think that valuation is more attractive to you.
It's a little bit ahead, but I think it's going to grow. You're going to see the growth, just like Nvidia grew into its valuation. I think ARM has the potential to do that. It's just a newly traded company again, right? It got taken off the market. If you want to go, I like tangible AI applications. So, and this is full disclosure, we banked it. I don't own it, but the firm does. It's Heartbeam. So this is a portable credit card sized device that can detect heart attacks, and their latest data came out that they can do it better than human cardiologists. So I get more excited about small cap, undervalued names that are really innovating and practical applications of AI. And I think that's what's really going to have the biggest gains, because we're going to see how AI really impacts our life, saving lives versus helping our kids, save a few grades by cheating on it in school, right? I mean, this is that doesn't have a long, sustainable business behind it, but other applications do.
Lou, always love having you. Strategy picks. Thank you.
Thank you.
Appreciate it.